Too bad I'm asleep. That's how it is. I watched the very first.
I took a survey of students and most of them thought it was not important to see the instructor or to see who else is in class. As long as they've got PowerPoint, as long as they've got solutions and lecture. Okay, let's get class started.
Are you doing some bigger items?
Huh?
You're doing some
Yeah,
math.
some calculations. Let's flip back to page 637 in your book, please. All of you in here this morning do have a book, so.
You still got that old textbook.
That what?
Old textbook. You still got that from last semester?
No, I
Let us
don't know.
use.
I can check and find out.
Okay.
Okay, have you not gotten one yet?
No, I've been had one, but I can't find it yet. Remember, I had one from last semester.
Right.
Yeah.
You lost it?
Yeah, I know. It costs so much money.
I know.
I wouldn't do the homework, but I'm looking around. I'm trying to find my textbook.
That would be a hard thing to misplace.
Yeah, I know.
That makes you wonder, doesn't it? 'Cause I guess you could resell them at a pretty good price too.
Yeah, last
Gotta have a shirt.
$115, $130.
Oh.
For that one book, that's what they said.
Oh, really?
Yeah, cool. I gotta find it too. I can't pass the class without it. You gotta do it. You asked it.
I don't have an old edition. I gave those out on the phone, so
I think you gave Gregory one.
may have. Yeah, I've given out all the old editions I have, but now I do have one on reserve
It's in the library?
in the library.
Okay.
So keep that in mind. All right, anyway, we are behind. We're on chapter 13. Now, if you don't have a book, check that one out in the library. Try to keep up. Chapter 13 and 14. Now, a lot of you want to use this first test grade as a drop grade. I don't know if anybody made over 80 on it or not. Anybody make over 80? Most of the grades were in the 70s and 60s. But on this next test, I'll probably let you use at least a half a page of notes. So that'll help because there's a lot of new concepts. But let's turn back to page 637. It explains a few things. We're going to issue stock. If we issue stock at par, we debit cash and we credit common stock. If we issue preferred stock at par, we debit cash and we credit preferred stock. That's it. Now, the page you're on right now is a premium. Look at the bottom, page 637. You debit cash, you credit preferred stock. You have a premium if you sell it above par. Par value, remember, is the value a new corporation puts on their stock when they start it. Okay? All right, page 638. Same thing for common stock, but here you take land at market value, and you still may have a premium on stock. No par, usually just debit cash and credit common stock. Some states say put a stated value on it, but just then it looks like par value. So that is the basic entries on those two pages for stock. 637 and 638. Now, cash dividends, we looked at those. Who has preference on dividends? Preferred stock. What does cumulative mean? We pay in arrears. If it were non-cumulative, we would not be paying that in arrears. And we looked at examples. We looked at a homework problem on splitting dividends. Now, on page 640, you see the three dates to the left in black. On the declaration date, we debit the cash dividends and credit the liability, cash dividends payable. Date of record, nothing happened. Date of payment, you debit your liability and credit cash. So that's all there is to paying a dividend. And remember, a dividend to a corporation is like withdrawals to a proprietorship. All right, we can give out stock dividends. Now, stock dividends is where it gets a little more technical. Let me try to look at an illustration here. All right, you've got 100,000 shares of common stock. Now, let's say it was $10 par. Okay, now you want to give a stock dividend, 5%. Now, what is 5% of 100,000? What's 5% of 100,000 shares? All right, it'd be 5,000 shares, wouldn't it? All right, 100,000 shares times 5%. Now we're going to issue these. Now we're going to know the par value, which we do. We've got to know the market value. The market value. How many of you have your cell phones with you? You like to use them. All right, see if you can Google MSN market. MSN market.
5,000 shares, or is that $5,000?
No, it'll be 5,000 shares. We're looking at dollars in it. Find anything on MSN market. Let's see what you got there. All right. So yours came right up. The Dow. The Dow is 24,797. It lost yesterday. And then there's NASDAQ. Now, this is what we got. He's got the Dow, NASDAQ, and Standard & Poor's. Now, the Dow is made up of a bunch of companies in this country. And it goes up and down. There's talk about it. It may go up and down. NASDAQ is pretty much the technology, like Microsoft. And the S&P is made up of a few preferred companies. Now, NASDAQ can go up or down in reverse to what Dow does. But sometimes they run together. Now, if we wanted to look up individual stocks, now, these stocks, if you look at a local newspaper, they have codes. So I know business code. So now look up DIS stock price. That'd be business. DIS stock price. Google that. All right. Now that's Walt Disney, and it's $105.72 today. I told you I bought that stock for $19 a share. Okay, so I paid $1,900 for 100 shares, but I could sell that then for $10,572. Okay, now you can look these up. It tells you the high, low, what was the previous, and so on. But you know, you can look up any stock, find the codes, or just look them up. It'll give you the DIS, the stock market code for Disney. And you know, there's a code GMC, I think, it's just General Motors. And each of them has a different, it's called a ticker tape symbol. Okay? That's what we're talking about, corporations. And we're talking about stock. Okay? Now, 5% of 100,000 shares, Susan, is 5,000 shares. Now, we got to know the market value. Let's say the market value is $15. Okay, now, all right, multiply 10 times 5,000 and multiply 15 times 5,000. All right, multiply $15 times 5,000 and multiply $10 times 5,000. All right, the biggest number. Look at page 641. The biggest number is how much? How much is the biggest number? 15 times 5,000. How much?
75,000.
All right, so look at the page we're on, and what do we debit? Look at page 641, and what do we debit for that 75,000?
Cash payment.
No, no. Look down at the green part. What do we debit for that 75,000?
Stock dividend.
Stock dividend. Now, when you multiply 10 times 5,000, you got what, 50,000? What do we credit for that 50,000?
Stock dividends.
Stock dividends distributable. So what would we credit for the extra 25,000?
Any capital and excess card.
Paid in capital and accessible. Now that's a stock dividend. Why do companies give stock dividends? Different reasons. Sometimes they don't have cash to give you a cash dividend, so they give you an extra share of stock. Okay? All right, so don't let stock dividends get you down. Stock splits, I told you, just a memorandum entry. All right, now treasury stock on page 44, 644. Now, treasury stock, if you buy back your own stock, correct? All right, you buy back your own stock. You got treasury stock. Okay. Why does the company buy back its own stock? Makes maybe the price of their other stock go up. Or the stock's doing so good, the company wants to own more of its own stock. Okay, so that's treasury stock. And look at the illustrations on page 644. We bought treasury stock for 45,000 in credit cash. Now, how much we pay a share for that treasury stock? First entry you're looking at. Now, if you don't have a book, I'm sorry. It's up to you to have a book. If you don't have a book within a week, you ought to just drop this class because you cannot pass without a book. Okay? You might hang on and use the one I have on reserve and make it. I don't know. But so many times we use the book in class. But I challenge you to have a book within a week or just drop the class. Okay? Because just sitting here without a book, you're going to fail anyway. So save your time and my time. But please put the pressure on to get a book. It's time. It's time to have a book for accounting class. Okay. Now, the second entry on page 644, you're going to sell some of that treasury stock for $60. Debit cash, credit treasury stock for the $45, and you got paid in capital. You had a gain even on treasury stock. It's a tough chapter, folks, and I just plead with you, cannot get it without a book and doing some homework. Now look at page 646. On this page, we looked at it in a PowerPoint. That's just two different ways of presenting stockholders' equity. So remember, you have moved up. Assets is equal to liabilities plus stockholders' equity. And you see how stockholders' equity has grown on this page. There used to just be capital, one number. Okay, for partnership, two numbers, but now we got stockholders' equity to work. Okay, we start off with preferred stock, and you know you should put the premium on there, common stock and the premium, and then treasury stock and the premium, and then retained earnings. Now, I like this first format better. It shows everything in detail. Then you subtract out what treasury stock you own. But the second format, you got preferred stock, common stock, and you got all the paid-in capital added together. Then you've got retained earnings. All right, the retained earnings statement goes to this chapter on Exhibit 9. Now, I told you there's so much new stuff in these two chapters that I will let you have a half a page, at least a half a page of notes on the next test. Okay. All right, we will practice the stockholders' equity section today. Now, financial analyses, and look at page 651. I haven't mentioned that. EPS. Now, EPS is something that investors look at. I have had doctors, attorneys, and dentists, and so forth to take accounting just to get these two chapters that we're going over on corporation, chapter 13, 14. They want to understand the stock market. They want to know what EPS means and what yield means and so forth. So for just a couple of these EPS, earnings per share, you take the net income minus preferred dividends over the number of common shares. That gives you EPS. That's an important calculation for investors. All right, now that's pretty much the chapter, and I gave you a whole bunch of exercises for today. Jonathan, what were those exercises?
Exercise 9, 10, 14, 16, 19, 20.
Problem 1A or?
Yeah, 1A.
All right, so we got a lot to go over today and a lot to practice. Cody, you have an extra sheet of paper, you can put your name on it and pass it back for attendance. Pretty good attendance today. 12 of you are here, and 2 of them text me watching live. There's 4 strays out there somewhere. We looked at a few of these exercises, but you got to practice these things or you will be hurting, of course. Of course, Susan and I was talking about solutions on Moodle. A lot of instructors won't put solutions on Moodle, but I don't mind. If you use them right, your homework don't count as a grade, just as bonuses. And if you just copy homework, you're not learning anything. You might do a little bonus, but you're not learning a thing. But if you use it to help you out of a ditch, you're on a problem, and can't seem to get it, maybe looking at the solution will help. Okay. This was problem 8, which you didn't have. We just issued common stock at par, and we gave some stock to the lawyers or whoever to help organize the corporation. And here we have to take land, building, and equipment at their fair market value and issue the stock at par. If there's any difference, then it's paid in capital. And here we just sold preferred stock for cash, credit preferred stock, par value, market value. Market value is cash. That's what you get out of it. Par value is what you credit preferred stock for. The other is paid in capital. Some of the old books used to call that premium, but they did away with premium quite a while ago. Now, exercise 9, entries for a cash dividend. The declaration, record, and payment. All right, all we've got here is $135,000 cash dividend. Now, those entries should be easy for you. Susan, what is that first entry for a cash dividend?
135,000.
Debit what?
Debit cash dividends.
And credit?
Credit cash dividends payable, 135,000.
All right. We're doing taxes on Wednesday night. We do a lot of students. Everybody's working, get their tax return done. What? It's away.
thought you did earlier.
We do them every Wednesday night.
Oh, you do it everyone.
Every Wednesday night, yeah. From 4 to 7, every Wednesday night. See the secretary downstairs, if you want your taxes done, she'll get an appointment. But anyway, a lot of those older people, they've invested a little bit. And, couple last night had to sell the stock. And, a bunch of them had dividends where they were given stock where they worked. Has anybody here ever worked at Walmart? Walmart gives you a few shares of stock, I think, because you're working for them. So we got dividends last night, put on a lot of tax returns. And this is what the corporation did. They debit cash dividends and credit cash dividends payable. Now, on the next date, they don't do anything. All right, on the date of record. So, Jonathan, what do they do on the date of payment?
Credit, cash dividend payable, debit, cash dividend payable, credit cash.
All right, now you should be able to get the interest for cash dividends. That's all there is to it. Okay. Corporation does pay them out. They do declare them. Okay. Now, number 10 is a little bit harder because it's stock dividends. Okay, journalize the entry, record the declaration of the dividend, capitalizing an amount equal to the market value, the issuance of the stock certificates. All right, now how many shares of stock did we have here? 800 authorized. How many were issued? $4,000 par. All right. Retained earnings of 33. The board of directors declared a 2% stock dividend when the market price of stock is $13 a share. All right, what is 2% of 500,000? Why am I taking 500,000? Why am I taking 2% of 500,000?
That was how many stocks were issued.
Issued,
Shares
not
were issued.
not what they had at the beginning. They may have 1 million available, they only issued 500,000. So what's 2% of 500,000? 10,000 shares. I believe it's 10,000 shares. Now, they said the par value of that 10,000 shares was $4. What's $4 times 10,000? All right, but the market value is $13 a share. What is 13 times 4,000? All right, Cole, do you have that put together in a journal entry form now?
All right, you debit stock dividends for 130,000. You credit stock dividends this year equal 40. And you also credit paid capital in excess of our common stock for 90,000.
All right, sounded good. All right. The 40 we calculated, the 130 we calculated, the 90 is the difference. Okay, and then we paid that. All right, then we didn't pay it, we just issued it, okay? We just issued it. We sent them the stock certificate. Okay. What person do you hear about in the news who's made their fortune in the stock market? Warren Buffett. He has made a fortune in the stock market. How did Donald Trump make his fortune? Real estate. How did the Bushes that were presidents make their fortune? Oil. So people in this country make their fortune different ways, don't they? Okay. And some of us, like me, never make a fortune. we We exist. We live. All right, B part, determine the following amounts, total retained earnings and total equity. Well, you're just going to add on, you're going to add on, going to add the paid-in capital. You're going to add the common stock. So B part, where the million comes from.
How much common stock?
What's the 1 million? I have to read again. What is it?
Paid in capital in excess of par common stock.
Okay, so the total value is three, okay. And then part 2 was what? Total stockholders' equity. Just add everything together. Add this new stock in there and this new paid-in capital. To get total equity 33.5. Do you need to see those figures added up, or I think you can find them. C, take the 2 million plus the 1 million plus 40 common stock and 90 for paid-in capital. All right, that gives you new common stock. Take the old, total equity, add the new equity to it, 90 and 40 is 130. This gives you the new equity. All right, so be able to do a cash dividend, be able to do a stock dividend. Don't worry about these parts yet. Number 14, of course, 11 was a stock split. 13 is just dividend transactions. 14 is treasury stock, which we haven't talked about before. Okay, on treasury stock, journalize the transaction of February the 11th, April the 30th, and August the 12th. Maya, how about doing February the 11th?
Debit, treasury stock, and credit cash.
All right. Maya, have you not looked at your test grade yet?
No.
I have it finished if you want to look at it. And I haven't given you credit for homework yet because I didn't know if you turned it in or not. Did you turn homework in? See, I gave you 10 points credit. You turned in the homework late that day. Yeah, I got it. I gave you 10 points. I believe that made you the highest rated class.
Yeah, fine.
Yeah, you got the highest rated class.
Okay, well.
All right, but that old test score is history, folks. The old test score is history, so let's worry about the new test score. Haley, you haven't looked at your test yet either, have you?
But I would like to see it.
Probably true, but after class, let's look at it before I record it. Yeah, Anthony, I think I did. Okay, so here is what mine is telling you. Just buy treasury stock at $17 a share. Okay, Haley, we're going to sell some now. So what do I debit?
Cash,
And credit what?
treasury stock. Capital for sale.
Okay, it's good to have a neighbor that has their homework, isn't it?
It sure is.
All right. Okay. Debit cash for the $20 a share that you're selling for. Credit treasury stock for the $17 a share that you bought it for. And then the difference is paid in capital. I don't know why they don't have the amount there. It must be here somewhere. Yeah. Paid in capital for the sale of treasury stock. $270,000. That's just $3 a share. Okay, but there is another entry. And Monique, do you have that next entry, the third entry on treasury stock?
Debit, cash, credit, or you debit, paid in capital, check that,
All right, now look at this one and listen to a different scenario. Now here, we're selling for $15. We paid 17. We got a $2 loss, right? Okay, so how do we do that $2 loss? We debit 60,000 paid in capital. We take it out, there's 270. All right, and treasury stock is still $17 a share at 510. So we debit paid in capital for the first time. Okay? Debit paid in capital first time. All right, now what if this entry were first? And we didn't have any paid in capital to the good, then we'd have to debit retained earnings. It would come out of retained earnings. That may pop up somewhere, so try to remember that. All right, number 16, more treasury stock transactions. All right. All right, Susan, do you have that one? See, quite a few of you have it. Okay, folks, I don't know if this is a good reading of the group or not. All the folks up here have the homework. How about you guys in the back? Okay. Let's make that a little different for next class or two. Let's make everybody in the back have their homework, hope everybody in the front does, okay? Anyhow, number 16, I'm just going to scan it with you. I advise everybody to do number 16. But now it's the same story. You buy treasury stock at $75 a share. You sell it at 81, so you got a $6 paid in capital. Here, you bought it at 75 and you sold it for 72. You got a $3 loss. So you debit paid in capital for 28.5. 14 and 16 are identical, just different numbers. Okay, now 19. All right, now 18 was not assigned. Now this is at a point, 18, that I want everybody to go ahead and do a stockholder equity section. And you do it on plain paper. Yeah, that's okay. I'll put you up here, move up here with Monique. Okay, what we're gonna do, we're gonna practice 18. You know, this is totally new to you, so you've got to do it. Now it says prepare the stockholders' equity section balance sheet as June 30th. Using method 1 of exhibit 8. Now where is method 1, exhibit 8? Go back to that stockholders' equity section I was pointing out to you. Exhibit 8 is on page 646. It says use method 1. I told you that's the one I liked. Use method 1 on page 646, isn't it? Method 1. And do number 18. Now you at home, do practice this. Everybody needs to practice that. I'm putting number 19 up there, so exhibit 8, method 1 and 19 are the same, so use the one on the screen as an example if you wish, or use the book, page in the book as an example. That was fairly short, and some of you have a workbook, you be putting that in. If you don't have a workbook, just put it on blank paper. Wanna have one?
The one, think of the 16.
Unless you just use this.
That's what I thought, that's a requirement, show that.
Maybe a couple more minutes on it. Okay, now midterm's coming up around March the 12th. We need to have one more test before midterm. All right, now here is what I want you to write down. And about half of you got this pretty much written down. This is exercise 18. You put down the common stock, and you do have to write down the 80,000 shares authorized, 68,000 shares issued. That's what you sold it for. And your paid in capital, or your excess, is 272. So common stock is 3,332,000. You sold treasury stock. You got total paid in capital. Retained earnings is earnings of 20,000. You got a total. Now, if you got treasury stock left on your books, or whatever price you paid, you subtract that out, and you come up with 23,676.
No question. Is it starting that order?
Yes.
Has to.
Yeah. However, look back here at 19. If you got preferred stock is in that order. It's first, and then common, and then retained earnings. So,
We're doing 18.
yeah. All right. Now, 18 has three parts. If you look at it, part one is common, part two is retained earnings, and part three is treasury stock. Subtract. Now, number 19 for homework has four parts. And that's as much as it gets. Preferred is part one, common is part two, retained earnings part three, and treasury stock part four. You got to remember, Ed, whatever works better for you in your mind. But it does have to pretty much go in that order. The wording don't have to be exact, okay? But you got to tell how many shares you have issued. Now, this company only has 2,000 more shares that they can sell. You cannot sell more than the state authorizes you to sell. All right, so that's number 19. We will have those in homework problems for Tuesday, which I've already assigned, right? So please try to do those 3 homework problems for Tuesday. We're leaving this chapter, and we're starting 14.
And next time we have 3A, 4A, 5A.
Yes. You already got your homework assignment. All right, we've got a couple other problems to look at today. All right, number 20, a retained earnings statement. Now look at this retained earnings statement, folks. It's just like a capital statement. A capital statement was taken net income, all right, taking your beginning capital, add net income, subtracted drawing. Here we take beginning retained earnings, add net income, subtract dividends, and we come up with ending retained earnings, just like a capital statement. That was your homework exercise. All right, let's go over to problem 1A, page 665. Now, problem 1A, this is what we worked at. Now, this is the last time you're going to see this. Last time you're going to see how we give out dividends. You probably will have one of these on the test. Okay? Now, if this is the last time, let's look at it pretty carefully. Now, I went over this in an exercise and in a made-up example. Now, on 1A, first off, figure out what dividends you have to give preferred. During the entire period, the outstanding stock of the company was composed of 250,000 shares of preferred cumulative, which was $20 par, and common stock 15 par. All right, first off, take your 250,000 shares times $20. Do that first. 250,000 shares times $20. Now multiply that by 2%. That's a guaranteed dividend. 2% is par. And let's see if this thing will take writing this morning. All right, now what'd you have, 250,000 shares? I don't know why it's disappearing. Maybe it won't on this part. And what was the par value? $20? Now what is 250 times 20? How much? 5 million. Now multiply that 5 million times 2%. How much?
100,000.
All right, so we're guaranteeing preferred $100,000. But now you can look at your first year here, and we've only got 80. So who gets that whole 80? And how much is in arrears?
20,000.
20. Now next year we owe 20 plus 100 is how much? But we can only pay 90. So that leaves how much in arrears? 30. Now the next year we owe 80 plus 30, which is how much? 110. 80 plus 30. Now this is what I want to take you down to then.
Yeah, 100.
Oh, you had 100 plus 30. Okay, it makes 130. I don't know why I was zero on that 80 there for some reason. Now, we didn't look at exercise 24, EPS, but put that in your notes. You need to work that, or we'll work it in class, whichever. All right, so the whole 80 because it's less than 100. The whole 90 because it's less than 100. We owe 20 from here and 10 from here, so we got 30 in arrears. And that's why I like to make another column over here called arrears. Okay, so we keep up with the arrears. All right, so we were 30 behind plus 100. So we give 130,000 and common gets the 20. Now from then on, we give 100 and common gets the remainder. But now how do we get these other items on here? How do we get the 32 cents? What would you divide 80,000 by? 250,000 shares. All right. And here, if you divide 100 by 250,000 you get. Now, if you add these together, all together, you got 240. Now divide 240 by 6. 1, 2, 3, 4, 5, 6. Divide 240 by 6. And how much is that? 60 cents?
1.6, no, yeah.
No, wait a minute now. If you divide 24 by 6 years, you get 0.4, right? 0.4 is what you're supposed to get every year. Here we go, 0.4, 0.4, 0.4. Here, these average out to 0.4. Preferred has to get 0.4 on the average every year. That's why it's cumulative preferred stock. They're guaranteed a 2% dividend now or later. Common's not guaranteed anything. But common, here we divide by how many shares. How many shares of common did we have? How much?
500,000.
Well, divide 20,000 by 500. About 80,000 by 500. And that's why you get 4, 10, 12, 16 cents a share. So these first years, it's definitely better to own preferred stock. But common stock is cheaper, and you're probably going to end up making more on common stock if it grows. Okay? That's earnings per share. That's not percent or yield. Now, you can get a percent or yield. All right, we're going to go back to exercise 24 for a minute. Net income minus preferred dividend. Usually the number of shares are the same. We won't worry about calculating an average here, but we're giving an ending value by 2 is all you can do here. But here earnings per share was $1.81. Year 2, 307. Then we went down in year 3. But I want you to look at number 25.
I don't understand it here.
Just a minute, we'll look at it a little slower there. Let's look down here just at these numbers. Caterpillar, we know they make construction equipment, don't they? And Deere makes construction equipment, a lot of farm equipment and so forth. But anyway, if you just looked at these numbers, which one would you rather own stock in? Deere, 581 share, right? Or 871 share. But that's deceiving. What if you had to pay $10 a share for preferred, but you only had to pay $1 a share for Caterpillar? So you got to look at see what you paid to stock, see what your yield is, which this book doesn't tell you about the yield. But when we get to a chapter on ratios, we'll learn that too. Okay. But Susan, the only thing to tell you now is the basic calculation. The basic calculation is net income minus preferred over average number of shares. So let's read number 24. All right, Pacific Gas and Electric Company, they give you the net income and average number of shares outstanding. They give you the average number of shares. You don't even have to calculate it. And so you take your net income minus preferred divided by the average number of shares. That's all you do, Susan. So look at that, and we'll look at it again before we have a test. Okay. All right, you know your homework. I'm going to let you go because 2 or 3 people needs to come in and see their grades. And if you want to see your grade, please, well, just stay right here. I'll bring them into class.
I didn't realize I was feeling the same.
You see the other day though. Oh, no. We went to the car. See the airball? Yesterday was I see it. I see what's up?
Oh, I'm trying to see it. That one problem, the one that.
You all mad yesterday. Oh, shit.
They think you get like 6 points or something.
She said, I tell them, hey,
So, I don't know.
29, 27.
So I get that too.
Hey, no.
You also do plus 20. I got 29.
I've already added your TNO. All right. But I don't think it was 85, I thought it was 81.
81 is kind of great. 81. I mean, only 80.
You need to train that.
Because the next one gonna be a 0. I ain't going, because this is the hardest one.
Yeah.
Oh, yeah, I ain't scared.
You know, I guess. I know it's grass.
Antonio, you didn't do much on those calls at all.
I know I missed 2 and I did 2.
Yeah, you didn't do much on it. I know you did 45 there, 10. I'm gonna go back and look and try to find your problems.
Yeah, I did 2 of the balls.
You did, I couldn't find them.
Remember, I told you in my stat that that's what I did my show my work on. You told me just to put it in there.
Okay, I'll go back and I'll find it.
Okay.
I have the homework too, I just got the, folder. Right.
Okay.
So I was expecting.
Okay. This 6 is 18, plus I get 6, 24. You didn't do much on those problems, did you?
On the back one, so the last one,
That was 41.
was it? Oh, I had no idea.
Oh, yeah. Well, try to do these 2 chapters on that. Okay.
Yeah, I was.
I want to see you do well. Okay. So now we'll stop the broadcast for this session.